Hello fellow traders. In this video, we're going to learn how to use advanced RSI techniques to spot market reversals like a pro. This isn't about theory, it's about equipping you with practical skills that you can use to improve your trading. We'll be dissecting the SPY chart, specifically the period leading up to 6/13/23, the peak, to demonstrate how the RSI can provide early warning signs of a potential trend change. Today we're going to get into advanced RSI techniques, spotting reversals like a pro, by a pajama trader. Give this a like and subscribe. Let's get into it. RSI, your reversal radar. RSI, a momentum oscillator that helps anticipate potential reversals. Overbought, oversold, identifies potential turning points, but not always reliable on their own. Centerline crossovers can signal shifts in the trend direction. Think of RSI as your reversal radar. It's a powerful tool that can help you anticipate potential changes in market direction. The RSI tells a lot about the value as an indicator of strength or weakness in the trends. While the overbought above 70 and oversold below 30 levels can identify potential turning points, it's important to remember that the market can remain overbought or oversold for extended periods. Don't rely solely on these levels as automatic buy or sell signals. Also pay attention to centerline crossovers, the RSI crossing above or below the 50. These can often signal shifts in trend direction. Bearish divergence, spotting cracks in the foundation. Bearish divergence, higher price highs, lower RSI highs. Interpretation, the uptrend is losing steam, increasing the odds of a reversal. Pro tip, use divergence to identify high probability shorting opportunities. Bearish divergence is one of the most powerful RSI techniques for spotting potential reversals. It occurs when the price of the asset makes higher highs, but the RSI simultaneously makes lower highs. This tells us that the uptrend is losing steam, increasing the odds of a reversal. The underlying message is that the price is still rising, but the buying pressure is diminishing. A signal to identify high probability shorting opportunities. But remember, divergence alone isn't enough to act on. We need confirmation from other indicators or price action. Mastering the 6/13/23 top. Mid-January 2025, approximate. The SPY at 605, the RSI at roughly 60, and the trend shows an RSI that was in the zone, and buyers were showing slight exhaustion. Early February 2025, approximately, the SPY reaches 6/13/23, but the lower RSI of 42.47 confirms significant divergence, creating a prime shorting opportunity. Professional traders would have recognized this divergence and prepared for a potential short trade. Failure swings, high confidence confirmation. Definition: identifies points where momentum attempts fail, signaling a potential trend change. Bearish failure swing. RSI enters overbought, pulls back, rallies but fails to reach overbought, demonstrating the failure of buyers to regain control. The break below a swing low then confirms the sellers have taken charge. Bullish failure swing. RSI enters oversold, pulls back, rallies but fails to reach oversold, demonstrating the failure of sellers to regain control. The break below a swing high then confirms the buyers have taken charge. RSI failure swings are specific chart patterns that can provide further confirmation of a potential trend reversal. In a bearish failure swing, the RSI initially surges into overbought territory, then pulls back on a subsequent rally, fails to reach the previous overbought level before breaking down below a previous swing low. This signals the buyers are failing. RSI failure swings and bearish divergence are not only guaranteed to turn into new trading profits, as you, the trader, have to take advantage of these opportunities. and that's exactly what pros do. Combining signals like a pro. A bearish divergence plus a trendline break is a stronger confirmation than either signal alone. Bearish candlestick pattern that confirms sellers are in control. The volume surge confirms increased selling pressure. Remember, no indicator is perfect, and not a single one. The key to spotting the reversals like a pro is to combine multiple signals and increase the probability of success. When you see a bearish divergence on the RSI and a break below a key trend line, that's a much stronger confirmation signal than either signal alone. So add that to a bearish candlestick pattern and then a surge in volume on downswing, and you'll have a probable setup. Always have a plan. Protect your profits. Stop loss orders, essentially for limiting potential losses. Position sizing, risk only a small percentage of your capital per trade. Never risk it all. And always avoid risking too much capital. Spotting reversals is only half the battle. You also need to have a solid risk management plan to protect your profits. This includes using stop loss orders to limit potential losses and carefully managing your position size to avoid risking too much capital on any single trade. Never risk it all, and always be patient for the right trading strategy and position. A solid trading platform with an automated trading system can alleviate this time-consuming and nerve-wracking task. Spot reversals like a pro. Mastering RSI techniques can dramatically improve your trading. Combining RSI with price action provides high probability reversal signals. Remember to prioritize risk management to protect your profits. Now you've learned the advanced RSI strategies and techniques that can dramatically improve your ability to spot potential market reversals. By combining RSI and price action with volume analysis, you can identify high probability trading opportunities and increase your chances of success. Remember, prioritize risk management and never risk more than you can afford to lose. With practice and discipline, you can master the art of spotting reversals like a pro. Thanks again for watching.